We've all heard the term buy term and invest the difference. The difference of what? The difference is the premium cost between term insurance and permanent insurance. And today we're going to talk about the difference and whether it really is that big of a difference or not. First of all, John, term insurance is a cost every year unless you die. There is no cash value built up in it. There is no surrender value in a term policy. Second of all, we have to realize that whole life insurance, participating whole life insurance, is preferred by the tax code. The dividends that grow inside that policy and produce an internal rate of return, compound annual growth rate, are tax deferred for your lifetime. That's huge. We have to consider that. And second of all, we have to consider the time value of money. Because yes, term is cheaper initially, but if we take it out 9, 8, 10, 12, 11 years, things can change, of course, depending on your age. And John, you're going to talk about that right now.
Yes, sure do. I have an example here of a 35-year-old male, and we looked at buy term and investing the difference in the S&P 500 over a 20-year period. We subtract 2% management fees and 20% for taxes on the earnings.
Which is really reasonable because Forbes says you're going to lose about 4.7% on an investment after you pay all the fees and whatnot. And then you got taxes on top of that.
Yeah, so there can be other factors. So then we put the rest of the whole life, putting the same amount as he was putting into buy term and invest the difference into a whole life insurance premium. We rounded it out it took 9 or 10 years for this example to break even. And at that point, we started with $400,000 of death benefit in both cases. At that point, it's breaking even, and 98% of the value in the participating whole life insurance policy, that's the cash value, 98% of that is guaranteed. We go 30 years out to the time this gentleman is 65 years old. Term insurance is going away next year. He loses the $400,000 of coverage there. But cash values in the participating whole life insurance are $109,000 ahead of the buy term invest the difference account.
Now he could choose to keep that term insurance, but his premium is going to be so costly at that point because the level premium has disappeared. And that's why 99.9% of term insurance never pays a death benefit. Yeah. People either convert it to whole life or they let it expire.
Yeah. And if I remember right, this particular case, the premium went to $16,000 a year the following year. So that's no brainer. No way is he keeping that. Death benefit, though, on the whole life policy at that point is $940,000 or more if the policy is performed beyond the guaranteed values. Fast forward another 20 years out to age 85, 50 years from when we started this, and the participating whole life insurance policy, the cash values are $1.2 million versus $808,000 in the buy term invest the difference, and the buy term invest the difference dropped his term insurance 20 years ago. So there's no death benefit there. There's still $1.5 million in death benefit in the whole life. So for more details on this particular example, you can use the link that'll come up here in this video or in the post here, and you can go get the details on this buy term invest the difference. You can see a little bit more of the numbers if you're a numbers person, and go from there. And since it does depend on age and health, the way the policies perform, when the break-even point is going to be, it also depends on your financial cash flow. You can also give us a call to look at your own particular situation. Our number to do that is 702-660-7000. You wanted to mention something else also before we closed, right?
I do, because a lot of people think it's an either-or situation. You got to buy term or you can only buy permanent life insurance. And folks, that's not the case. Here at Life Benefits, we advocate a both scenario. Because when you're young and have needs of death benefit for children's education or raising a family if something tragic should happen, there's nothing better than a cheap term policy to give you that liability coverage.
Certainly.
At the same time, if you don't start the whole life soon, then the premium cost on it is prohibitive, and you'll never have either when the time comes when you're in your golden years. So starting with both and building the value in your whole life policy, like John has showed you, will eliminate the need for term in later years when the cost is so prohibitive.